A couple of announcements before we begin. First, I would like to, so those of you who were not here last week have not heard this. If you were here last week, you're going to hear it again. But we are embarking on a semester-long project here at the Lieberthal-Rogel Center called Dancing with the Dragon. And the first two events in this series are going to happen this week. And then just to give you a preview, this is a project where a visiting artist is coming to help students design and build a full-length dragon for the traditional dragon dance. Other students are learning Chinese percussion, and they're learning how to dance the dragon dance, and then we'll be performing the dragon at different places on campus at the end of the semester. So the first two events in our Dancing with the Dragon series are both this week. Tomorrow, or no, Wednesday, February 4th, it is tomorrow. The first public lecture is in Lane Hall at 4 p.m. This is an event, a Meet the Artist event with the artist Tsiang, who is speaking on her journey to feminist art. And she is here for a month-long residency to work with the students who are building the dragon. So we're very excited about this. She came last semester to put her biography in the Institute for Research on Women and Gender's Global Feminisms project. And so it's going to be great to welcome her back. So 4 o'clock tomorrow, room 2239, Lane Hall. In addition, on Thursday, we'll have a music performance, Sounds of the Dragon, Images of Fantasy, Music and Visual Arts Reimagined. And this is going to be held at 7 p.m. in the Keene Theater at the UM Residential College, again, Thursday, February 5th. Should be a wonderful experience, and it will highlight the university's Chinese music ensemble, which is an ensemble of faculty and students who play Chinese music here at the university. Okay, so I am delighted today to welcome you to the second presentation in our noon lecture series for winter 2026. Just in case you need it, the complete series schedule is available here today and also available on our website. And email reminders are emailed weekly. If you would like to be on the email list, see Ina Schlurf at the end of the presentation today. Our presentation today is given by Nicholas Calcina Howson, the Pauli Tsiang Chair Professor of Law, the Pauli Tsiang Professor of Law at the University of Michigan Law School. Professor Howson works and writes on Chinese law and legal institutions, on Chinese legal history, market regulation in the PRC, administrative law, and people's court jurisprudence. A graduate of Williams College and the Columbia Law School, he is a former partner at the firm of Paul Weiss Rifkin, Wharton, and Garrison, working out of the firm's New York, Paris, and London offices, and finally rising to managing partner of the firm's Asia practice based in Beijing. Howson has also taught at the Berkeley, Columbia, Cornell, and Harvard law schools, and he served as a consultant on Chinese law to the Ford Foundation, to the UNDP, United Nations Development Program, the Asian Development Bank, and the Chinese Academy of Social Sciences. He acts regularly as a Chinese law expert or party advocate in U.S. and international litigation and in U.S. government enforcement actions. Professor Howson is a designated foreign arbitrator for the China International Economic and Trade Arbitration Commission and the Shanghai International Economic and Trade Arbitration Commission. Today, he's going to be speaking on illegal enforcement against insider trading in China's securities markets, rule of law defects, and rule of law responses. Please help me welcome Professor Howson.
Thank you, Anne. I'm gravely disappointed. I thought I was the first part of the dragon dancing series. I came with my anyways, I didn't. I know I'm here, so I'm very glad to be here with in front of so many old friends, and I hope even some old friends who are with us on the Zoom telecast. So today I want to speak to you in a slightly conversational style, not only to vindicate, to resist wide-held assumptions that lawyers are both opaque and boring, but because what I need to talk to you about today is quite, at moments, technically complex. And so I want to try and set the scene, as I say, conversationally or kind of easily and generously before I bombard you with some pretty technical aspects. So the way I look at the world and how it understands or evaluates the Chinese political legal system is that people often ask the question, is there rule of law in China? What is rule of law? And their focus often associates to criminal law, constitutional law, administrative law, what we lawyers call public law. At the same time, I think that outside observers may de-emphasize or perhaps disregard how the political legal system works with respect to market regulation and the law as it applies to property rights and contract rights and everything that you need for a commercial or an investment system. They will say, well, that aspect of the legal establishment in China is merely a utilitarian project designed to do what? To create national growth, markets and market economies, et cetera, and really doesn't have that much to do with broad or narrow concepts of rule of law. So today I'm before you to slightly refute that or put some pressure against that view and illustrate how a set of issues which have arisen with respect to the description of a very technical area of the law, the insider trading law in China specifically, can give us some real insights as to, or give us insights as to how to evaluate rule of law in China, even broadly outside of this kind of narrow, what appears to you to be sort of a commercial or a trading idea or circumstance. So as I say, I'm going to, with you, make a sort of focused peek into a corner of the Chinese legal order, but it's an extremely complex area, and it's the area, it's an area that some of you may have intuited exists or may have even participated in, which is this phenomenon of so-called insider trading. So before I launch into my substantive presentation, as I said, I want to set the scene a little bit. Market regulation in China is something that I've always thought of as quite startling. Why? Because certainly when I first lived in China, and as you know, just until recent decades, there really weren't markets in China, and there wasn't much regulation or law. Not only that, but there also weren't established notions, within the last couple of decades of property rights or contract rights. And so when I look at market regulation, in particular the regulation of securities markets, I see a market that didn't exist before, a market that was not subject to any kind of affirmative law or regulation, but also trading interests that are also defined by law. What else, can you ask, is an equity interest in a company, other than something that's defined by a company law? What else is a bond, other than something that's defined not only by corporate law, but also by contract law? That makes the debt real. And so when I look at China, I think, boy, this is a circumstance where none of this existed until very recently. You just have to cast your mind back to think that the stock exchanges in China only started in 1990 and 91, even though they started before they were formally approved. There was only a company law in 1994. There was only a market regulator like our SEC, the CSRC, in the middle 90s. And all of this activity was undertaken almost sua sponte, but often without all of the long-term attributes that we would expect. So you may ask yourselves, at the Center for Chinese Studies, why are capital markets important, other than if you have an affection for watching movies called Wall Street and what's the latest one, The Wolf of Wall Street, terrible film. Anyways, why are capital markets and securities markets in particular so important? Well, my answer to you is that in a capitalist or a semi-capitalist economy, Capital markets are the premier mechanism to assign capital to the most efficient producer. So you know the story, right? You stand up, you say you have a company, you have a search engine, you call it Google, and you go to the public capital markets and say, I want your money, I want you to invest. So the capital markets provide a context whereby capital can find what capital hopes is the best and most efficient producers, right? And if they fail, then the market price goes in the tank and they can't attract capital ever again. Now, in your mind, especially if you're from China, you may say, well, banks do that in China, and they certainly do that in Western Europe. Well, banks are different. They can be really hard on borrowers. They place all sorts of constraints on borrowers that borrowers don't like. Also, with a bank loan, you have to repay the money. You don't have to do that with equity investment. You have to service the loan, right? You have to pay interest. So it's something that's not terrific for all borrowers across the world. In China, when you look at the banking industry, even though there has been substantial corporatization and attempts to sort of hive off the state-owned commercial banking system from the state-owned economy, without a doubt, and we know this because of the ever-rising non-performing loans, without a doubt, Chinese banks will lend to privileged borrowers pursuant to things that may have nothing to do with credit. So if you look at bank lending as something which helps assign capital to the most efficient producer, it may not work reliably in contemporary China, and it certainly didn't work in the last several decades. Now, some of you may say, well, that's fine. Another American telling us that capital markets are king, banks are rubbish, and that's why we're going to have this long, boring talk today. You're right in China. The percentage of GDP which is allocated via the capital markets, think the stock exchanges, but also the listings offshore, is dwarfed by what happens through bank lending, through commercial banks in China and outside of China. Now, that is true, but my view after 2015 and 2016, after the Shanghai and Shenzhen crashes of those markets, is that markets in China now have actually an explicitly political salience. When you look at the response from the central government and the Politburo specifically with respect to what happened in Shanghai in 2015 and 2016, and to say it was a robust response is to undersell it. It was a robust, direct, extra-legal response to assure investors that things were okay, to go after purportedly insider traders and stock manipulators, to fund the markets in a way that hadn't been seen in China since the 2008 stimulus, et cetera, et cetera. So I think, and I don't think it's just a personal view, that securities markets in China have a definite meaning and sensitivity to the central government, but also politically as to how the nation goes forward. So one of the key aspects of having good capital markets that allocate efficiently is that they have to be attractive capital markets. And the only thing that's going to mess up capital markets from being attractive is if we smell there's fraud, right? So I question you, if I'm, Sinopec, and I have if I'm Sinopec and you understand that something that I'm doing is based on fraud, or I'm presenting information to you fraudulently, or I'm engaging, as we'll talk about today, in insider trading, would you invest? Would you part with your money for Sinopec shares or any other shares if you thought the market was infected? So what we say as lawyers and economists and political scientists is that if you're going to have a well-functioning capital market, you've got to present to the world and the investing public that it's a level playing field, that it's clean and it's transparent, and no one has a terrible advantage, whether informationally or in any other way. Because if you don't have that, you don't have a mechanism that's going to do this big job of attracting capital to fire up your economy. So finally, conceptually, some of you may say, oh, it's a talk on insider trading. What is that, other than something which doesn't seem to be very good? So I thought I'd sort of push out a definition for you. If you have insider trading, you want to identify insider trading, you need clearly traders. You need people trading securities. The problem is they're trading securities based upon material, important, significant information that is not yet public. So that's the key aspect of insider trading. You have people taking advantage rather opportunistically, criminally in some situations, taking advantage of information asymmetry because they have the information and they know if the stock that they're trading, selling, or buying is overvalued or undervalued, and nobody else does. So if you have inside information, it's a sweet deal because everyone else is in the dark. And I think you all know what insider trading looks like in the event. Think of a typical biotech firm. It's got a wonder drug that's going to cure my cancer, and they're in clinical trials, and the CEO hears that the clinical trials are a failure. There will be no wonder drug. The CEO, if he's smart, and if he's not restricted by insider trading law, dumps his shares. Why? Because the minute that information comes out, no one's going to want to own that stock. Everyone's going to sell. So that's a paradigmatic view of insider trading. You see, it's non-public information. It's highly material, clinical trials in the tank, drug in the tank, company in the tank, and you have someone who's in possession of that information trading. So last bit of introduction. I'm going to use some terms in my presentation, which I just want to, well, they're not even terms, they're sort of phenomena that I want to assure you China has. So China now has securities. China has equities, equity securities, interest in companies, equity interest. Also has debt, also has markets in these debts. China has stock exchanges, as many of you know, where these securities are traded. China has traders. China has retail investors and now increasingly institutional investors. Some of these investors are private, some of these are absolutely state-owned and state-controlled, and some are kind of in between. And that will become maybe important later in my presentation when you think about who's getting what information, how, from where. We'll see if I have time to raise that. China also has abundant insider trading, right? This is a phenomenon that was under-enforced until, I'd say, 2011, 2012. But at this point, you just have to look at what's openly reported as enforcement activity. There is no doubt that there's a lot of insider trading, which used to be sort of a common journalistic refrain in China. Oh, I guess the Chinese markets are all screwy. I guess there's lots of insider trading. Everyone nodded their head. But we now know, right, because we have a lot more empirical data to understand this phenomenon, not just via the enforcements that we will talk about later. China also has law, has substantive law, which addresses the creation of securities. That's the company law. And securities issuance and trading. That's the 2020 now PRC Securities Law. So this is a statute, which is like our 33 and 34 Act in the United States. China also has, as many of you know, sub-statutory, not law provisions. Some of this is 行政法规, administrative regulation, and you go down sort of a norm tree to all sorts of norms which are actionable, enforceable, sometimes not entirely, but we have to take account of them. And as you'll see, they play a big role in my presentation today. China also has an administrative agency, which is the appointed government state regulator of this activity. So I said a minute ago, golly, China has markets and has regulators and has rules and has laws, all of that true. China's regulator is the China Securities Regulatory Commission, or what I'll talk about as the CSRC. China also has exchanges. I've already mentioned Shanghai and Shenzhen. There are other exchanges now popping up in China. And of course, Chinese issuers have pretty intimate involvement with foreign exchanges. So that's a mode of communication of some of the law and practice that I'll talk about. China also has courts and judicial officials, real-life courts where you go in front of them and you plead your case. And China has prosecutors who will bring criminal cases. This is a way of saying that China has civil law, civil enforcement, but also has criminal law and criminal enforcement. And finally, happily for me, China has lawyers, right? These are the agents of expertise who will work on behalf of the parties who come before them. And one last little tidbit about the Chinese legal system. There are two things that I want you to come away with from this presentation about the Chinese legal system. The first is that, at least notionally, Chinese law is supposed to have independent and autonomous authority. So the law is supposed to have its own authority. That's another way of saying that the law is allowed to, if it's law, authorize a certain kind of prohibition or a certain kind of breach or a certain kind of affirmative legal obligation. What you can't do in China is proffer a law and then promulgate or use or issue a subordinate norm that is somehow in conflict with that law, okay? And that will become a big part of our story. But I want you to think not only of the hierarchical aspects, but the idea that law is somehow the thing that authorizes the macro, and then, of course, you can regulate the micro, you can regulate parts of it as long as it's included, as long as it's included in the basis that you use. So there's a lot of talk out there in the academy and in salons and living rooms about rule of law in China. And we always hear, you know, what does 依法治国 mean? What does socialist rule of law under Xi Jinping, et cetera? My ambition in this presentation is a little bit more, is a little bit smaller, but it's something which I think is almost more important. It's not a question as is the Constitution enforceable in China? Instead, it tracks onto this similar phrase that you hear in China, 依法行政, administration according to law. So what I'm going to focus on in my presentation is an example of administration, which I don't think is according to law, but administration in the sort of intimate regulatory sphere. The presentation really tracks very, 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 very serious tension between the law on one side and the civil enforcement practices and the criminal enforcement practices of state actors like the CSRC or the prosecutor. So that's the basic landscape that I want to give you. It's also about this idea of ordering norms in China. I will pay a lot of attention to what Chinese law says and then talk in circumstances that are pretty diverse about what subordinate to law norms mean or how they can be used, especially when they're in conflict. Third, I will mention what I think of as the attractive nuisance in Chinese lawmaking, which is a fealty to, an admiration for US law. And you'll see a part of my story is a completely messed up affection for a doctrine that we have in our US Supreme Court, which was taken up by Chinese drafters as state of the art. What's better to have in our law than something that replicates US doctrine? Because after all, they have the US Supreme Court. They've done insider trading for years. So we want some of that magic sauce, and that is, in my view, the root of the problem. And I've gone all over China for years saying this, and everyone says, what, you hate America? And I say, no, I don't hate America. I like good doctrine. So we'll get to that. And finally, as I said, we'll look at a failure, perhaps, of rule of law in a pretty specific circumstance, but a circumstance that I'm trying to sell you is really important, right? It really matters that markets are deemed to be regulated. Okay, I'm going to first start out with kind of a sort of personal story. I was in Beijing in 2012 at a conference at Tsinghua, and I sat down next to an old friend of mine who's now a law dean at a very good law school in China. He wasn't then, and I was about to give a paper, but a paper that I'd only posted on, I don't know if you know this, SSRN, which is where we all post our drafts, and no one reads them there. They don't read them after they're published. But anyways, we post them. No, that's not true. Jeff's articles, they all read. So I had this article posted on SSRN, and it was about part of the presentation I'll make today, which was there was a real infirmity in the enforcement of insider trading law in China. And it was quite specific, and I thought it was the best argument possible. I thought it was extremely persuasive. I was very proud of myself. You know, again, no one was going to read it, but I was proud of myself. So this soon-to-be law dean sits next to me and says, kind of in mafioso terms, nice paper on insider trading, Nico. I mean, he said it in Chinese, so he used my Chinese name. And I say mafioso, it seems sort of vaguely threatening. And I said, oh, you've read it? And he said, yeah, it's on SSRN. Everyone's read it. And so at this point, I'm sitting in the front row at Tsinghua, getting kind of sweaty and nervous. It turned out that this article had been read not only by my friend and other academic colleagues, but also by the regulator. And this is what I was waiting for in the discussion. My friend reported that the regulator read it, digested it, and then convened a special meeting of the CSRC, not in Beijing, but down in Shenzhen, where they have lots of resources in the legal and the market regulation department. And he stood up in front, instead of criticizing me, which is always my due, and instead of me having to do a self-criticism, apparently this official, who I know well, said, we're making mistakes. We're making mistakes. We're doing this badly, right? Which was looking at my article and saying, oh, this person has a point in his analysis, so we're actually acting, what I suggested was illegally. Quickly after that, the Supreme People's Court issued what we'll call a 司法解释, what do you call it? Supreme Court judicial explanation. It's an explanation of statutory law, which I was told was a response to my paper. I'm not sure it was, but it was an attempt to respond to some of the things that I had critiqued in the paper. But I do know that this whole episode did not result in me being sent off to re-education through labor anywhere in China, but instead something even worse, which was being appointed to a special group to aid in the redrafting of the Chinese securities law. And being the only foreigner, that was a fascinating experience for me to be inside the parliament with the Fa Gongwei and the Cai Jingwei trying to set things up. So what did I do in my paper a decade ago? And here I'm going to be pretty facile and pretty quick because, as I say, it's boring and can be somewhat opaque. So what you want to take on board is, sorry? This was in English, this paper. Yeah. I just did one in Chinese. What you have to take on board are two different ideas of how you regulate insider trading. The first, I hope, is more intuitive to you. You have inside information. Doesn't matter who you are. You could be the CEO, you could be the wife of the CEO, or the husband of the CEO, or you could be someone who just encountered this information, and you trade on it to your benefit. That sounds bad, right? Many, many, many systems in the world look at that as insider trading and punish it. They don't ask who you are. They don't ask who you owed a duty to. They don't ask who you breached a duty to. They don't ask those questions. They just say, you got hot information, you go out and trade on it, and you make a pile of money, and you move on to your next crime, okay? That's the way the world works. And we call that, I'm being sort of cartoonish, the equal access theory. It's because we want to give all investors equal access to information. And if someone's insider trading, no one else has access to that sweet information that's going to make a lot of money. Now, as I keep saying, that's the rest of the world. Sadly, in the United States, through the brain of Lewis Powell, who was a great Supreme Court justice, we have an entirely different way of regulating insider trading. Now, I don't want to go into the weeds on this, but I do have to say two things. Justice Powell's effort, his design, was to limit the insider trading breach, to make it narrower, to make it less applicable. So he came up with what is now called the classical theory, which says that only certain individuals can be enforced against for insider trading. Who are they? This is going to get legal. They're people who have a fiduciary duty to the company that issues the securities. And there's a little bit of a deviation on that, but that's basically the idea. So if you're not the CEO, if you're not on the board of directors, you're just an employee, do you have a fiduciary duty? Maybe, maybe not. If you're someone who has nothing to do with the company, trade away on the inside information that you've gotten. Later in the history of American doctrine, everyone understood that this very narrow view of insider trading, it led to massive under-enforcement of what was clearly insider trading. And so Justice Ginsburg came up with an additional, I don't want to say alternative, additional theory, which we call misappropriation. The misappropriation theory says, I don't really care who you have a fiduciary duty to. If you steal information from a company, if you breach a duty of confidentiality you have, doesn't matter who you are, and you trade on it, boom, you're guilty of insider trading. So there are two prongs in the US doctrine. One is what we call the classical. We look at who you have a duty to, have you breached that duty by trading? And second, did you steal it? Did you breach a duty before you took it? So, as I say, that's the US idea. You know what the rest of the world was doing. China, unfortunately, in its securities law, which started in the late 90s, the first one was drafted in the late 90s, but this really comes up in the 2006, anchored its insider trading prohibition in those two US-style doctrines. So they're not completely the same, But if you read the Chinese statute, you see something that smells a lot like the classical theory, which is we care about who you are and if you've breached some kind of duty, right, in terms of then trading the duty you owe to your counterparty is the way we talk about it. And they have a part in the statute which talks about what's effectively misappropriation. It's 非法获取内幕信息, right? And it's a form of words, and it just sits there, and you go, oh, I guess they mean misappropriation. The question, of course, when you look at the Chinese statute is why do you need both when you've kind of widened out the classical theory? Okay, so this was a structure which people, not just me, said was extremely limited. It left out a whole bunch of characters who you'd want to capture in any good, decent, healthy insider trading regime, such as someone advising on an M&A transaction. Say you're an investment banker, you're advising Ann Co. as she's about to acquire Nico Co., right? You have information as to what's going on. You're an advisor, you buy shares in me, they go up once Ann makes the bid. That's not something which you get under the classical theory, okay? Same thing with respect to tippees. This is where the presentation gets ridiculous because we'll talk about tippers and tippees, right? Tippers are people who have this fantastic information and they tip it to someone else who's a tippee who then goes, wow, this is great, I can make a lot of money, and they trade, okay? This structure in the Chinese statute initially made no provision for people who receive inside information and then go ahead and make millions. Now, the backstory here is that the law was presented, everyone celebrated, the National People's Congress issues the Chinese Securities Law. Meanwhile, back at the farm, back at the regulator, people were apoplectic. They understood that this was a very limited recipe to go after what they knew was rampant insider trading in the Chinese markets. So they had a choice, right? The choice was to go, well, we better abide by it. It's been promulgated by our national legislature, and the US does that, sort of, so it's got to be good, right? It's got to be the most modern thing available. They didn't do that. They said, well, this is just crazy. We can't operate this way. So they promulgated, I don't want to say promulgated, they issued to themselves, to a very limited audience, what they called guidance provisions. The guidance provisions completely move out of the way the regime that's set forth in statute. Why? Because they want to go after inside traders. And it speaks on steroids of what I called a minute ago the equal access theory. So it allowed the CSRC and the criminal prosecutor to go after people just because they had inside information, they were trading on it, without having to pay any regard to the statutory formulation. So that was the focus of my paper. And I said, look, those internal regulations, it's not law. They're in conflict with the law. How dare the state enforce according to these sub rosa norms? And as I say, I was not put in prison. I was actually lauded. I was actually, told, oh, he's got a point there. So as I said a moment ago, what happened after that paper was published is that the Supreme People's Court in 2012 put out a judicial explanation. So a judicial explanation of the Chinese legal system is not a rule, it's not a regulation, but it's the way that it's how the Supreme People's Court, based upon a delegation of authority, makes an explanation of statutory law. So you have a contract law that says, notice should be delivered within 10 days to end that contract. And then the Supreme People's Court could put out a judicial explanation that says, within 10 days of putting the notice in the mail, or within 10 days of receipt, or whatever. So that's how you do an explanation. But you need law to make the explanation from the judiciary. So what the Supreme People's Court did is two things, and this is the most important, one of the most important aspects of my presentation. First, they gave us a judicial explanation not of the civil law, of the PRC Securities Law, but instead of the criminal law, okay? Now, the criminal law always had this little nugget that said insider trading bad. So I want you to see the Supreme People's Court is racing things up, but they're doing it with respect to the criminal statute. So you might think, and I do think this, that whatever's coming from the Supreme People's Court is applicable only with respect to criminal prosecutions and not with respect to civil enforcement by the CSRC pursuant to the civil law. The second thing they did was they said, the classical theory in Chinese law is predicated on identifying people as persons with knowledge of inside information. those are your defendants under the civil law. And as I told you before, there was also this kind of stray clause that talked about 非法获取内幕信息, which I call misappropriation. So they said, look, we've looked at the statute. The statute has a blank clause at the end of the provision that says you can call people who are persons with knowledge of inside information. There are other people who could fit that, and those will be identified by the regulator in separate administrative regulation. Sad fact is, the regulator never responded to that invitation to broaden the scope of defendants. So the Supreme Appeals Court said, well, we can't fiddle with that part of things. I know what we'll do. We'll provide a very robust gloss on the misappropriation idea and do it by including all sorts of characters who no one could ever imagine are misappropriators or stealers or robbers, but instead just people who have status. So for instance, if you're concerned about family members possibly being caught up as inside traders, they're not listed ever as people with knowledge of inside information, but they are in criminal prosecution set up as people who are included as misappropriators. Now, as you can tell from my tone of voice, this is crazy. Why? Because Grandma Wong is not a misappropriator. She has done nothing wrong. She's just been told some terrific information by her son or her daughter, okay? Now, if you wanted to do it straight, you would expand the notion of who's a person with knowledge of inside information in the statute, but they didn't do that. But that was their strategy, and that at least made a lot of the criminal prosecutions that we understand were going on viable. So a lot of this, at this point, is sort of in the province of law professors, stuff only law professors could love. We don't love much that's not boring and ridiculously silly. So then the crash came in 2015 and 2016. And as I said a minute ago, the response from the Politburo, the central government, was fierce, robust, and in my view, extra legal. They did a lot of stuff that had to do with a lot of money and a lot of enforcement that wasn't enforcement of the law. It was just showing 杀鸡给猴子看, right? It was just to show the people that the government was attending to what they said caused these crashes, which isn't actually true. So concurrent with that, the Chinese government started really ramping up enforcement against insider trading. So if you're in my position, you've identified a defect, a fly in the ointment with respect to the system that is on offer. You've already identified this sort of sub-rosa norm that isn't law, shouldn't be applied. You've also identified an explanation of the criminal law, which expands in a kind of crazy way liability for insider trading, but only, you think, under criminal prosecution. And then what you see is ramped up enforcement, whereby there is just promiscuous enforcement against what's identified as insider trading. Now, in those years, it was very easy to pull up enforcement decisions on the CSRC website. You read them very simply, and my experience was 1 out of 2 was lawless. 1 out of 2 was applying the insider trading prohibition in a way that not permitted by Chinese law, okay? But as I told you, I was then invited to participate in the drafting of the new securities law, and the new securities law did eventually come out. In effect, it came out in 2019 and effective in 2020. One of the big things, the big hobby horses, there are 2 big hobby horses I rode when I was meeting in the parliament. One, of course, was this insider trading defect. So, I made these views really apparent, and we talked about it. A lot of people talk about this. And another aspect of securities regulation, which I'm not going to worry you about. So you might expect, great, a new statute. I bet those Howson problems are all going to be fixed. Not so fast. Unfortunately, there were significant amendments to the securities law in other areas. The insider trading provisions were tweaked ever so slightly to include some of the people I just talked about, people advising on M&A transactions who are trading in the shares of the target. Check, got that. Some other people, maybe people inside the regulator who shouldn't be trading on information they get from being inside the CSRC, all well and good. But the basic structure that I've outlined to you, which I think is defective, is not altered. Now, this is a huge missed opportunity. Why? Because I said to you before, There are two prongs in the statute. One looks at people with knowledge of inside information and says, you bad apples, we're coming after you. And the other says, you misappropriators, we're coming after you. I told you that there's a last clause under the first prong, which says, and anyone else identified by the CSRC as a person with knowledge of inside information. That was the great missed opportunity from 2006 to 2020. Why? Because the CSRC never promulgated a regulation saying people with the surname Lin, clearly people with knowledge of inside, were going after Anne Lin, okay? So everyone went, boo-hoo, that's sad. But in the process of drafting up the 2020 law, and I know this as a fact because I was there was until very late in the day a clause that said, and anyone else in possession of inside information. Those would be included as defendants. That would have delivered what I call the equal access theory, and that would have delivered tremendous ease in terms of enforcing inside information. In April of 2019, that clause came out. So now if you look at the statute, it just lists a specific group of people who are defendants, and then it has this clause that says, and anyone else identified pursuant to administrative regulation, of which there is still none. So as I've indicated now several times, it's easy now to look at published opinions on the CSRC website, which frankly make a hash of enforcement. Now, this is all civil enforcement. This is the CSRC moving against inside traders, allegedly, for fines and disgorgement of bad earnings and stuff. We don't really have a good picture as to what's happening in criminal prosecution, but you can bet you if they're screwing up on the basic statute that they provided in the civil sphere, and the criminal statute only says, there's insider trading, look over to the 2020 securities law, you can imagine that some of the criminal prosecutions are also beyond the bounds of law. Now, I have given a paper on this quite recently, and I have a really good example of a tipper-tippee chain whereby you can see the CSRC struggling. They can apply insider trading to the first person who communicates, tips the inside information, but everyone else down the chain, the tippees who then become tippers, the tippees who trade, the tippees who don't trade but tip again, so they're tippee tippers, all of those people are not captured under the statutory formulation that exists in China. So it's very easy as a lawyer to analyze this and say, that's terrible, right? There's a whole bunch of enforcements that are happening. Now, one response, and this is the subject of a paper I just gave in China, one response is, hey, simmer down, Howson. It's over there in the Supreme People's Court's explanation of the criminal law, right? And there you get it. That's really why there everyone's uncle is an insider trader. It's cool. It's fine. Well, I resist that. Why? Because these are civil enforcements under the statute called the 2020 PRC Securities Law. They are not enforcements pursuant to the criminal law. So my suggestion is that a gloss on the criminal law should have nothing whatsoever to do with how you apply law in another system of law. And as I say, I gave this a similar presentation, or a presentation focusing on this in Beijing in October and November. And I'm glad to say that it was mostly academics. There were a few regulators, but people were really in agreement, is the only thing I can say. And it's heartening for an academic who's interested in something. But what it meant to me was that my academic colleagues in China, my regulator colleagues in China, who I know well, right, and they're all acting in good faith, understand the problem and take on board this part of my critique. So I'm going to summarize now because Ina said I had to stop soon, but maybe ask you some questions or maybe put some speculation out there. So this is a problem. Why? Because at least until 2020, the CSRC was clearly acting illegally. They were enforcing against insider trading pursuant to this private document, which was absolutely in conflict with the law. And they knew it, right? They knew it, but they said, look, you idiot legislators, you gave us this crappy system that you think the Americans like. No one likes it. We're not going to do that. We're going to enforce against evil inside traders. But they knew that it wasn't consistent with what Chinese law provided. So the 2020 statute comes out, and contemporaneous with that, that internal document is quite publicly annulled. So there's lots of beating of the drum, dragon dancing. I knew you'd get it today. That wicked internal document is no longer enforced. They could do that because clearly they were intent upon using an explanation of the criminal law back in the civil sphere, which, as you see, they've done that. So my view of this is the opposite of 依法行政. If you think about the CSRC as a 行政部门, an administrative agency, they're doing anything but acting in accordance with the law. The law is what they're stuck with in the civil statute, the 2020 PRC Securities Law. So you might scratch your head and say, okay, there must be a fix. I think there's a lot of easy fixes. One easy fix is to insert into that provision in the 2020 PRC Securities Law that April 2019 disappeared clause that said anyone who's got inside information could be a defendant in an insider trading enforcement action. They haven't done that. I don't think they're ever going to do it. So the other thing is more radical, is to fall out of love with the US inheritance. The problem here is someone thinks it's important and valuable to take on a system that comes from a radically different environment, but also, in my mind, is ill-advised. It's ill-advised even in the US, in my view, right? And in the view, certainly, of a lot of enforcement actors. So, golly, I wish in 2020 we could have amended the law to remove this terrible inheritance from the US. But as I say, that's quite a lift in China, especially the way the NPC works. So I want to leave you, and maybe these are questions that you can answer when you respond, if you're still awake. What does this mean, right? This is clearly an identified example of not 依法行政, right? It's the opposite of 依法行政. So, some analysts would, sociologists, anthropologists would say, well, that's China. That's the way governance works in China. The state, the yamen, they just do what they do. There's not much fealty to what the law describes. That's post-Geiger, and that's kind of your stuff. Of course you're obsessed with that. But that's not true, right? Because there's a lot of discourse in China, indigenous discourse, nothing to do with foreigners, right? That talks about the value of 依法行政, the real value of it. So, I'm not a big fan of plus ça change, and the yamen does what it always did. Now, does it have something to do with the expectations of the people who are governed in China, right? You're a person who used insider information to trade. You made a great profit, but it turns out you weren't actually guilty. You weren't covered by the law. How do you think as a Chinese person when the CSRC is, sealed up your door and taken away your money or impounded your bank account? Do you just think, well, of course, that's the big bad state coming at me. I have those expectations. I'm not going to resist. For those of you who have been in the United States for a while, you understand we resist, right? We go, well, I'm going to get a good lawyer and I'm going to find a way to resist that. Maybe that doesn't happen. But I don't think that's the case here. If it was a poor peasant taken off and captured for something that the peasant didn't have any idea about, that's different. These are people who are largely sophisticated traders. They're so sophisticated that they're insider traders. They've gone to school. They got money. They've got wealth. They've got knowledge. They got lawyers. So I don't understand why this population just sits back and go, oh, yeah, you got me. I did a bad thing. It's not the bad thing called for, prohibited in the law, but it's a bad thing. So, take me off, take my money away. Another view I have is this an example, and we see this sometimes in the Chinese legal system in action, where the Chinese legal system, the enforcement system, has a little bit more room when it's after people who are determined to be acting badly. So what I'm saying is that, picture this. I'm an insider trader. I've used inside information. It's not what's prohibited under the statute, but I waltz into court and I say, yeah, I'm guilty as hell, but not under our law, right? So therefore you should let me go. There's a sense that we give a little bit more room to the system to say, look, you're a bad actor. You did a bad thing. You're screwing up our capital markets. So everyone just says, yeah, let's go after those people. And in particular, when after the 2015 and 2016 crashes, when I told you there was this very robust reaction, everyone suddenly was guilty of securities manipulation and stock fraud and, of course, insider trading. Or, this is what our economists would say, is the cost of acting illegally by the state less than the benefits the state gets from ensuring that it looks like there's enforcement and also, the markets are being cleaned up. So I'll end there and ask you that question. What do you think's going on? Is it just a blank vanilla, lazy regulator? We don't do rule of law in China, or 依法行政, even though we say we do it? Is it the sort of back on their heels position of the people who have actually traded on inside information, and so we're not going to cut them any breaks at all, even that rule of law break? I ask you what you think. So I'll conclude there. Do I call or yeah?
Thank you, Professor, for that very informative and educational
And boring.
lecture. Fascinating. You used the example of Grandma Wong or Lee, whatever her name is, earlier,
Yep.
Midpoint in your lecture. Why shouldn't she be punished and the government be able to at least recapture any gain she received, even though she was completely innocent because her granddaughter or grandson, who was an inside trader, told her, buy this stock. My way of thinking about this is that China should have, both under civil, definitely under a criminal statute, impose a tremendous fine on the civil side that would take that money back away.
Yep.
Not necessarily put her in jail, but it's just too hard to figure out whether the granddaughter or grandson insider trader was someone who she knew, the grandma, was giving her inside tips, or innocent or not.
Yep.
It just doesn't seem right, and it's too hard to figure out whether that was done intentionally or not.
Yeah, and so you and I agree. You and I and the CSRC agree. You and I and anyone who wants to regulate this particular securities market at this particular stage in Chinese history all agree. We should be able to go after fairly innocent but profiting Grandma Wong or Auntie Wong. The problem is that the law doesn't allow that. The Chinese law doesn't allow that, right? So therefore, we're all on the same side. I mean, the CSRC we're all in the same boat. We'd love to go after those people. And in fact, the point of my presentation is they are going after those people, but in contravention of what the law holds. And so some of you may say, oh my gosh, he's a legalist. He's so hardcore, like a 极端的法家. I'm not. I just recognize that the Chinese securities markets are young, fairly immature, and it would be great if at this stage there was maybe over-enforcement against this very pernicious thing called insider trading. Because I guarantee you, if you're an investor and you think there's insider trading shot through a market, you'll go to Vancouver or the New York Stock Exchange. You won't go to that exchange. So we agree.
Thank you so
A
much.
sociologist.
Thank you so much. I guess my question is also sort of peeking behind the curtain because you're in the room sort of question. So I'm wondering to what extent the fickleness of enforcement and the murkiness of the doctrines and these tensions and contradictions is a product of a legal insufficiency that can be mended through technical corrections, or whether it's a product of political incentives, so that the tensions and fickleness and the gray areas are left by design.
So maybe, but I don't think fickleness is a problem here, and I don't think confusion about doctrine is. There's nothing fickle about enforcing something in an illegal way, right? That's a really concrete, directed act. It says, it looks at the law and says, we can't do that because of our local circumstances. We have to go after these other people who we know are guilty of something bad. We have to go after them. Also, there's nothing opaque about the doctrine as it's reflected in Chinese law. It's just the wrong doctrine, is all I'm saying, right? So, you know, from a political point of view, the big question I think you're asking is, well, why don't they just fix it, right? And that's the question I have a little bit more difficulty with, because everyone wants to fix it. Everyone, right? Because it's kind of a sin against notions of 依法行政 and rule of law. It's also something which seriously inhibits, possibly, enforcement, which everyone agrees is a public good, is a good thing to do, right? Then the question is, I mean, I sat in that room in the more the Caijing way than the Fagong way, right? And said, you know, we can fix this. And, oh, yeah, well, and there's this sense that it was in there before, and also it's the way Justice Powell talked about it. So we've got to have this and this. Although there were changes, but you know, that's not at the level of politics. That's me and technocrats talking about something. I have no idea why this is so simple, right? It's simple. Sorry, I'm complaining now, whining at the lectern.
Thank you for your educated speech. I agree with you. At some point, this market is still not mature yet, so that's why it's caught in this law definition is still behind. On the other hand, I guess the impact of this is because of Chinese culture.
Chinese culture?
Chinese culture.
Yep.
They don't, with not so matured, you know, situation, they don't want to overdone it, and then that could cause some other, you know, I expected things to happen. Yeah. That's my personal thinking.
Maybe.
So
but
it may still takes time to get this done. For the Western, you know, the side, because of the so long history of the mature market. Yeah. You know, people are, you know, absolutely agree with that. But in Chinese culture, in my view, sometimes it takes a slow, you know.
Right, but I think if that was true, that would inform us that the legislator, whoever creates the law, would do something much simpler, much easier to apply, and wouldn't get caught in this never land of having a law that they constantly breach in application, right? And I think, you know, if you take that generous view of Chinese culture and you think, boy, there's a really easy fix here where, you know, and there's such an appetite for it inside the regulator, but they're stuck with the law. Yeah. But I just want to be clear that you understand that I'm not saying, this is not one of those cases where I'm saying China should copy the US. I'm saying the opposite. China should reject the US, right, and do what China wants to do, but also it turns out what Western Europe is doing. Same legal system.
Presumably you want the law to be clear, also clear on what the goal is that's meant to be achieved and so forth like that. It seems as if Judge Powell is the fly in the ointment here. Could you tell us a little bit more about why he decided to restrict the people who were targeted, and was that followed by other countries? And again, why don't you just dump all that shit and then make very clear what you're interested in is people who are illegally making gains from the use of insider information?
David, I don't understand your question really.
Well, the first question is Judge Powell.
Okay.
Is he an outlier or not? I have no idea. Did the other countries decide that was a good idea to restrict that way and then make it more complicated?
But I don't know what you're referring to by Judge Powell.
Justice Powell.
Oh,
right.
Oh, okay.
Right.
I'm sorry.
He must have been a judge once, maybe. Anyway.
Yeah. Okay.
But anyway, that's one part, and the other part.
I know the answer to that, by the way, what Justice Powell was up to. Jeff will hopefully confirm this. But
it seems the simpler the law is, the better. And also, if you're following the law and you know what the law is, and you don't have to deal with this subsidiary non-legal stuff. That seems it would be good too.
So Justice Powell had an agenda, which was to restrict the application of insider trading rules, as well as securities fraud. So he did a number on 10b-5. He did a number on insider trading. So that's clear. We know he has a memorandum.
Why did he want to restrict it that way?
Oh, because he's a pro-business. He doesn't want, the capitalists of America.
He didn't want his buddies to get in trouble.
Not his buddies, but he had this view of free commerce and, over-regulation. It's 1973, the problem here in this presentation isn't the clarity or not of the law. Both formulations are eminently clear. It's a choice, right, with respect to the structure in the statute that is really unworkable, right? And so the easy answer is just to use another structure that's much simpler, actually, and workable, and aligns with what the policy goals are of the Chinese government or any market regulator that's,
I was thinking it was simple and clear, so I did not see a distinction between the two.
Yeah.
But yeah.
I have to go teach soon, so.
Okay, then I'll ask for maybe a informed guess. Okay, from your point of view, it's so easy to fix all these problems, but it kept being delayed, That means there is something deeper than technical questions right there. So can it be a good example to show where the incentivization and situations of reform and opening has changed? At the beginning, the priority was to free up the market, to free up individual agency, to free up government agencies.
Yep.
So 依法治国 certainly would follow, not over that. But now we have seen 40 years, 45 years of that, and the reality has become complicated.
Yeah.
And that incentivization system just no longer works.
Yeah. So the fact is that it was fixed in the eyes of the regulator. That was the internal guidance provisions. So they said, yeah, we're stuck with this crappy statute formulation. We're not going to pay attention to it. We're going to act according to this other, it's a document actually, but this other doctrine. And they went ahead and did it. So there's ample evidence that they said, sucks what we've got there in the statute. Who pays attention to that? We're just going to go after everyone we want to go after. So that was the case, right? I did my article. Supreme People's Court comes out and goes, oh, there's got to be another way to do this, right? Which doesn't lead to that. So that's why they put all this pressure on the explanation of the criminal law. But again, if you talk to people in the CSRC, they say, oh, we're done now. It's okay, because we've expanded the notion of misappropriators to cover all these other people that we should be getting under people with knowledge of inside information. And this is such a detail, but I should share this with you. The criminal law itself makes provision for expanding the list of people with knowledge of inside information via administrative regulation. They couldn't do that still. So what they did was they used the Supreme People's Court to provide a gloss on the other node, right? So that's another indication that they're stuck even on the administrative regulation, as we know they are. But if you talk to people from the CSRC now, they say, we're fine. I think they'd say we're fine. I know they say we're fine. They do say we're fine, right? But then there's people like me who are kind of irritating and say, well, I fetishize 依法行政. Are you really 依法行政? And so this last time in Beijing, I had lots of good discussions. People said, well, maybe your hair is a little bit on fire, Nico, and here's why. But not everyone said that. A lot of people said, yeah, you're right, we're still screwing up. It's a little screw up, right? Who cares? They're inside traders. Take them to prison. I don't care, right? But for lawyers and people who are concerned about 依法行政 or 依法治国, it's important, says me. So I do have to go teach. So badly.